a very good evening. You're watching The Money Show on ET Now this Monday evening. I'm Mubina Kapasi, and this show, of course, will give you your daily dose of personal finance management, especially in these turbulent times when we are all on lockdown. Unfortunately, income sources as well may have trickled down quite a bit, especially if you have your own business, you're self-employed, you're a freelancer, and for those who are salaried, well, the job security at this juncture too is a bit weakish, and hence we on The Money Show are going to talk to you about how you can prepare your personal finances for any sort of emergency that may arise on the future income front. So that's one of the topics that we'll be discussing today. In fact, I will be joined very soon by Adhil Shetty of Bank Bazaar to talk about their latest report on managing cash. Interestingly, they've bifurcated the topic of personal finance into 5 important pockets, which I think 4 important pockets, pardon me, which is, I suppose how it should be looked at. We'll also be talking about 2 notifications from the government. One is with respect to life insurance premium, and the second one is pertinent to all you NRIs who are stuck in India because of the extension of the lockdown. So stay tuned to The Money Show. Well, first up, let me bring on board Adhil Shetty, CEO and co-founder of bankbazaar.com, to talk about the latest report that they have released, and that's to do with money management during the coronavirus crisis. Adhil, many thanks for joining us today, and I suppose your report is coming in at a time when many have called this as a crisis like no other, something that's way worse than 2008-2009's global financial crisis. Unemployment has risen to unprecedented levels globally, in the United States as well. Unemployment claims were at a record high. And I suppose your report as well mentions that this situation calls for calm-headed decisions that help you fortify your household finances. Now, Adhil, I don't know about calm-headed, because, sometimes when human beings are plunged into chaos, the only thing that they cannot be is calm-headed, Adhil. So I think tip number 1 is very important, to be calm-headed, don't you think?
Yeah, I think that these are big decisions. You should know the consequences. If you're selling an instrument, buying another security, it's better to be calm. Take a few days, take a week, calm down, think about what your plans are, and then move. So I think don't panic is very important, Mubina.
Right, okay. Let's talk about now cash. Today everybody is saying cash is king. And if you have cash in your hands, I think you should, use that with utmost discretion. Don't just squander it off, obviously. And ensure that you're making extremely careful investments. At this juncture, Adhil, when it comes to having cash at home or in your banks, is that the right thing to do? I mean, if you have a limited amount of cash, should you just let that be as opposed to scouting for investment opportunities?
So 4 points on managing cash. One is have an emergency fund. So what does an emergency fund mean? So it means 3 to 6 months of your monthly income, have it in what you call your emergency fund. Point number 1. Point number 2, keep this emergency fund in a bank fixed deposit, or keep it in a high yield savings account, a savings account which is paying you 6% interest per annum. Point number 3, if you're building an emergency fund now and you're liquidating assets, be thoughtful about how you're liquidating assets, because there are costs to switching out of one asset into another, and these costs need to be considered. And number 4, be very frugal in terms of your expenses for the next 3 months. Think twice about every single discretionary spend, and if possible, postpone that discretionary spend for 3 months.
Okay. Many people also, of course, have fixed deposit savings accounts, but so many times we get this query on The Money Show that which bank is safe. In the last 8 months itself, we've seen PMC Bank, we've seen the whole case of DHFL as well, where a lot of these NBFC fixed depositors lost their money. And then we've seen the smaller cooperative banks like Mapusa Cooperative Bank. We also saw, the CKP Cooperative Bank's liquidation. Yes Bank was a touch and go. Of course, now things are doing okay on Yes Bank ever since the whole management changes happened. SBI bought a significant stake, etc. But what do you do on that front? And how should you judge essentially which bank is okay to put your money in and which is not?
3 points, Mubina. Firstly, in a scheduled commercial bank, right, which is regulated by the RBI, in a scheduled commercial bank, no depositor has lost money in the last 50 years. So yes, there have been moratoriums, but if you go with any large bank, depositors have not lost money. That's point number one. Point number two, if you want to look at a metric, look at the NPAs at that bank and maybe select a bank which has lower NPAs. Thirdly, right, if you want to avoid or mitigate the risk of a moratorium, we advise that a couple, like my wife and I, keep our saving accounts in different banks. So even if one bank, like you said, the Yes Bank case, goes into a 4-week moratorium, you're able to access your money in a different bank.
Okay, splitting it basically across, at least two banks would be a good idea. Like we say, diversification. I'm going to delve a bit more on the banking bit, Adhil, because at bankbazaar.com, that's one of the things you guys do consider as your forte. Small finance banks. Today there are very, very few instruments that can actually say that, look, here you go, I'll give you an 8% rate of return for 1 year. I'm talking about the non-senior citizen schemes. Small finance bank FDs are one of those, instruments. But again, like I said, would you recommend that viewers could consider those, depending, of course, I'm sure on their risk appetite, and like you mentioned, splitting it across two banks? So maybe don't put the entire chunk in one SFB, split it maybe in 2-3 SFBs. But firstly, would you even recommend our viewers look at an SFB right now?
So we spoke about diversification. So my wife and I have our accounts at different banks. So that ensures that even if one bank is in a moratorium, you're safe. Now you brought up the specific point that small finance bank have higher interest rate. One could also extend that argument to some AAA rated fixed deposits like the HDFC fixed deposit, which even today is above 7%. Now, should you take it, right? Now, I believe that is a choice one needs to make. Yes, the interest you're making is 1% more, 2% more. Are these high quality deposits? Yes, they are high quality institutions which have a very revered brand. So I think it's a choice one makes. One needs to decide. There's no set yes no answer to this, unfortunately. I think one needs to decide if they're comfortable doing it, because yes, it's more return, and one needs to consider.
Right, okay, fair enough. The other point is with respect to insurance, and you guys have a whole section on that as well, in this money management report. Now, unfortunately, with so many people grappling with this cash flow situation, many of them have actually been unable to maintain their insurance policies by making those renewal payments or those premium payments. But in the list of priorities, in the list of expenses to be made and bills to be paid, how high would you pay? How high would you place life insurance?
So I would place health insurance first. The reason being that if you fall sick, this is what pays your hospital bills. I think that's absolutely critical. Life insurance is very important for the earning member of the family. So let's say that in a family there is someone who's the breadwinner, and if they die, the family is going to have to meet the expenses without that breadwinner's income. So term life insurance is very high, Mubina. In fact, I think that think of your term life and think of your Mediclaim before you think of any other expenses. Because if something goes wrong, you need to have that confidence that, hey, I can get the best quality healthcare at a hospital, and my dependents won't need to run from pillar to post for the next 5 years, and they should be able to pay for themselves. Now, the report is obviously downloadable. I hope you can share the report on the ET Now Twitter handle. It's on Bank Bazaar's Twitter and LinkedIn handle. But we say at least have 5 to 10 years of your annual income as your term life policy payout if you die.
Well, yes, you can always access this report, and we will be flashing that the website as well. It's constantly appearing, www.bankbazaar.com. Employer provided insurance. Now, I as well have been guilty of relying on the group insurance cover that my employer tends to provide. A lot of our viewers as well do fall back on the Mediclaim that the employer provides. But Adil, you reckon that that would not be enough?
Here's the challenge, Mubina. You have your employer insurance now, you have it through your 30s and 40s. Now, let's say, for example, you decide to become an entrepreneur and you leave the current employer, or let's say that you decide you want to move on, or let's say someone retires. Now, the irony of the situation is if you're 50 years old and you have any kind of pre-existing condition, it's very hard to buy health insurance. If you're 60 years old, it's even harder. So the irony of the situation is when you're young, people want to offer you health insurance, but you depend on your employer health insurance. But when you're older, you leave employment and you want to buy a policy, but no one's willing to sell it to you. So it's very important, right, that in your 30s and your 40s, you start your own family floater health plan, cover yourself, cover your spouse, cover your child, and keep that plan with you until you die. And hopefully, right, that's not going to be till your 70s or your 80s. But trust me on this, when you reach our parents' age, it is so critical to have bought your medical insurance when you are 30 and you're 40, because when you're 60 and 70, it's very, very hard to buy it.
Yeah, it's ironical, but that's the fact, because at the end of the day, even insurance companies do want to make some money if you're going to approach them when you are a bit older, naturally. And unfortunately, the risk of you having to make that claim would be a bit higher as opposed to when you are younger. And that's the reason why the premium amount as well, which you will pay if you take a health insurance policy at a later date, would be a bit higher. Okay, a top-up insurance. Adil, if you could just explain that concept to our viewers. What do you mean by a top-up insurance? And is that something that you recommend every viewer should do, especially in times that we are living in right now, where health is now a big, concerning point?
Yeah, I think it's an interesting product to consider. So it simply works as the following. So let's say you already have an insurance policy for 5 lakh. And you realize that 5 lakh might not be enough. I have a family member who had some kind of heart procedure and the bill was even higher. You can buy a top-up plan. The interesting thing about the plan is it won't cover the first 5 lakh of your medical bills. So the first 5 lakh has to be covered by another plan. But the top-up plan will cover from 5 lakh to a certain top-up amount. So it gives you a protection above that minimum cover which your first plan has to provide. Now, the benefit of this, right, is the top-up plan is cheaper than a regular plan, because the company which gives you the top-up plan is aware that the first 5 lakhs is covered by someone else. So the top-up plan tends to be much cheaper than the original plan. So if you buy the first plan for 5 lakhs or you buy a top-up plan for 5 lakhs to 10 lakhs, the top-up plan tends to be cheaper. It's a good time to consider it, especially when we know healthcare costs are going up, and especially when you know healthcare is top of mind. It's a good time for you to consider a top-up plan.
That's everything that you should consider when it comes to insurance. Extremely important to continue your premium payments. Try not to skip on them. Make it, make timely payments of all of your insurance policies. And then, of course, one of the most important topics, and that's with respect to investments. And the report as well has very properly split it between two. Making fresh investments right now, again, something that a lot of our viewers have been toying with. We keep getting emails that since the markets are so low, should we can make a payment right now? And then the other segment is existing investments. Now, those investors, of course, have a different story to tell altogether. Adil, I'm going to talk to you first about existing investors, especially those that are invested in mutual funds. There are almost every mutual fund holder today is sitting on a negative value. The NAVs of the mutual funds are quite lower compared to the investments or the SIPs that they made in them. What would you recommend such investors do? How should they identify those funds that really have no hope of reviving when the markets and the economy will revive, and those funds that will show promise in the long term and will recover and are only facing this blip because of the situation we are in right now?
So people have their money in two types of mutual funds. So their equity mutual funds and their debt mutual fund. Your question pertained to equity mutual funds where the markets have been down and what to do about that. Now, my view is the fact that the market is down is in the past. It's over. There's nothing that we can do about it. We are in the current situation today. Now, we found, and this is mentioned in the COVID money management report, we at Bank Bazaar believe that if we are starting today, an index equity mutual fund typically outperforms a fixed deposit over a 5-year period. So the question you need to ask yourself, right, is when do you need this money? What is your plan? I would say that if you can wait for 5 years, and if you put aside this money for a child's education, or you put it aside because you need it in 5 years to buy a house, I would say starting at time zero, an index mutual fund typically outperforms an FD. And what has happened in the past, we cannot change. So I would say if you have time, please continue your SIP. Please continue to hold your equity mutual fund, because what has happened in the past, no one can change. And over a period of 5 years, starting today, the market or the index fund tends to do better. Now, that's my view on the equity mutual fund. Now, if you need your money short term, so you tell me that, hey, listen, Adil, this is not for 5 years. I'm going to need this money 1 year from now to do something. Now, if you need money in 1 year, if you need money in 6 months, you should not have been in equity to start with. So your money should never have gone into equity mutual fund if you need it in 6 months. You should have it in a much safer debt instrument. So if you need your money 6 months or 1 year from now, then you should not be in the equity mutual fund market. You should be in a safe bank fixed deposit, and you should reconsider whether to stay in the market. So it really comes down to what is your horizon, Mubina. If you have 5 years, stay in, continue your SIP. If you realize that you need the money 6 months or 1 year from now, then shift to a safer instrument like a bank fixed deposit.
It's all about timing. It's all about the time horizon. If there's a goal that you have to achieve in the fairly short term, say, let's say, if your child wants to go for an education abroad next, August, September, you should probably move over to a bank FD or something that's a bit more safer. But if you have a long-term horizon, then just continue with your SIPs. You're just getting a chance to pick up more units at a lower price. Diversification, Adil, we spoke about debt funds, we spoke about equity funds, but I think you have to lay a lot of importance on gold as well, especially because of the way it has rallied. It's that one instrument, one asset class that has actually seen a great move. Now, a lot of our viewers will say, oh, I've got plenty of gold lying. My wife, my mother, my sister, my daughter, etc. They all have gold jewelry lying at home. What would you say to them, Adil? Would you recommend that you do not consider that jewelry and the gold investment that you make for your portfolio and from a financial perspective should be different?
Yes, Mubina, absolutely right. Keep the jewelry you have at home different from the way you think of your investments, because it's hard to sell that, right, when you need to sell it. When it comes to gold, gold as a asset tends to be volatile. But you pointed out something very important, Mubina, which I think people should realize. When the markets are down, gold tends to do well because people gravitate to it as a safe asset. So if you're going to hold a small proportion of your total net worth in gold, we advise you to hold it in electronic form. So there's a sovereign gold bond, which the government of India makes available. There are gold ETFs, there are digital gold. So if you're thinking about gold as an asset class, which will rise in this kind of crisis, hold it as an electronic security, and don't think of your gold at home as electronic or as your investment which you can liquidate, have your gold in digital format.
Okay, so that's a clear-cut strategy coming in on gold. And now, of course, Adil, coming to loans, an extremely important topic at that. Again, categories, right? One is somebody who is considering taking a fresh loan, though at this juncture, with economic activity being stalled, with purchases as well, whether it is for real estate or for vehicles coming to a standstill. I suppose that bucket of people will still be, will still be lesser. But on the other hand, of course, we have people who are paying down EMIs, whether it's for their home, whether it's for their car, whether it's personal loans that they may have taken. So, for those who are facing a cash crunch but have an EMI coming up, Adil, mercifully, of course, the RBI has said that, look, we'll allow a bit of a moratorium. You have a 3-month or a 2-month moratorium, but you'd have to cough up the money, from July onwards. For people who are facing a cash crunch, Adil, would you recommend they opt for the moratorium?
If you're facing a cash crunch and you're not able to make your EMI payment, you can make use of the moratorium. But keep in mind, and you've said this in an earlier show, Mubina, the moratorium is a window during which you're not paying your EMI, but your interest is being calculated on the principal. So if you've taken a 3-month moratorium, your interest is accumulating on the outstanding principal during that period, which will result in the period of your loan increasing, the number of tenors increasing. Now, we've discussed before, and I think ET now has covered this, the impact on you is much more if you are in the early years of your loan than if you are at the end of your loan. So that's a separate calculation that people can do. But one important point we're advising people on is, if you need to use the moratorium, go ahead, but make a prepayment of the number of EMIs you took the moratorium for as one bullet payment within 12 months. So what that means is, number one, if you can pay your EMI, pay it. Number two, if you can't pay your EMI, use the moratorium, but try to do what we're calling a bounce back at Bank Bazaar. We're calling it a bounce back. Take the EMIs you didn't pay and pay it as a bullet payment within 12 months, because that will automatically reduce your outstanding principal, and it will help you make your outgoing EMI the same as if you didn't take the moratorium, and it'll prevent a large increase in your EMI. So take it if you need to, but think of the bounce back, because that's important.
Yes, so we had Adil when the RBI had first offered the moratorium, and then we had that FAQ from SBI, which really did bamboozle a lot of borrowers. And Adil said that if you're on the earlier part of the loan, then it could be a bit problematic. But if you're on the last leg of the loan tenure, you just have a couple of more EMIs to go, then maybe the burden may not be too much. That was an important tip. And here's yet another tip coming in from Bank Bazaar, something called as bounce back moratorium, which means if you have, let's say, deferred payments for 2 to 3 months, try and prepay the same amount of EMI when you sort of come out of the cash crunch. Okay, Adil, if somebody needs money and it's urgent, they can resort to a credit line from banks. There are several now facilities. One is a COVID loan, the other one is a personal loan, of course. What would you recommend? What sort of an emergency loan from banks should viewers opt for if they urgently need cash right now and they don't have access to their salary or their income is down?
So a couple of points. So one is, in this kind of situation, banks are particular about credit scores. So one should always have a good credit score, because it makes a difference having a score above 700, 750. So this is point number one. We tell people, be aware, track your credit score, make sure that it's good. And there's several online sites, where this is possible. Number two, right, there is an unsecured personal loan available. I think SBI is calling it the COVID emergency loan, where today you can take the loan via video KYC, where you don't need to go to a bank branch. In the privacy of your home, you can actually apply. It's pre-approved, you do a video KYC, and you can get the loan. So typically, I think for a cash crunch kind of situation, we tell people to evaluate a personal loan. If it's unsecured and it's up to 5 lakh, we tell people to evaluate a loan against property if the money they need is larger, like 50, 60 lakh, and they have a property they have which they can mortgage in order to get the loan. But 2 points, definitely check online and manage your credit score, because this is really critical in COVID. Every bank is very particular about your credit score. So, make sure you track it online.
All right. Well, there you have it, folks. 4 aspects of personal finance, and Bank Bazaar's report covers all 4 aspects. Simple and actionable tips that you can implement and get to working to ensure that you and your finances are prepared for the COVID aftermath. Adhil, always a pleasure having you with us on the Money Show. Thank you so much for joining us today. Well, folks, we'll just keep you abreast with some important news that has come in from the government. And first up, I am going to go across to the important news that has come in on the insurance bid. The IRDAI has further extended the grace period for renewal of life insurance policies whose premium was due in March, now till the 31st of May. Basically, your life insurance policy will continue even now, even if you've not made the premium payment, but you need to make sure you make the premium payment by the 31st of May. Remember that on the 23rd of March and the 4th of April, the IRDA had already announced an additional grace period of 30 days for policies where premium fell due in the months of March and April, and now there's yet another extension that is coming in. So this objective, of course, is only for all policyholders to ensure they make the premium payments due within that period, so as to keep the policy coverage in force. So folks, you have till 31st of May, ensure you make your life insurance premium payments. And additionally, another important role to determine the residential status of NRIs. Remember, in Budget 2020, FM Sitharaman had said that for those NRIs and for those individuals who reside in India for more than 120 days, they will be considered as residents. This time period had been shortened from 180 days to around 120 days. But now, with the lockdown, with the airports being shut, NRIs have had to stay for longer, and the government has accordingly altered the residential status to discount the days of the lockdown. Okay, folks, well, with that, we'll wrap it up on the Money Show. Many thanks for watching. Stay tuned to ET Now.